Aren't you interested in learning breakthrough wealth building strategies, such as how to flip a home in less than 2 weeks using other people's money with no real estate license, or how to build a low-cost home-based business? You can discover how to take passive income from any source and invest it into real estate, stocks, or business to become financially independent investing in any market with Residual Roads Business Institute. Collaborate with Andre and other Residual Roads advisors to create a free action plan and start implementing strategies today. Go to www.residualroads.com or email info@residualroads.com. Welcome to the Investing Uncensored podcast. You've been searching for different ways to become financially independent or generate passive income to live out your life's purpose as you've seen others do it, but need insight on how. Well, get excited because here you'll discover the tips and resources to fulfill that need. Andre Stewart has spent more than a decade successfully making it happen for himself and others. This is the Investing Uncensored podcast. And now here's your host, Andre Stewart.
Welcome to another episode of Investing Uncensored. I'm your host, Andre Stewart. And today we're going to talk about a couple different things, man. I've been MIA for a couple months. All valid, you know what I mean? To give you guys a brief synopsis. On my mom's side, I lost my grandmother and my aunt who was taking care of her all within a matter of like 7 days. My grandmother died, and then 7 days, my aunt died right after that. And not to mention my other aunt, died 5 months prior. So my mom basically lost, both of her sisters and her mom within a matter of 5 months. So it's been kind of tough. This all was in the last, couple months. And most of this with my grandmother, my aunt was like maybe October. So it's very recent. So I've been MIA, but I am back. Took me a little bit of time. I'm still going through it, still processing everything, but there's a lot of stuff going on. It's been a while since I recorded, so I'm trying to get back into the grind. We got to keep it going. There's a lot of stuff happening in the market, man, with the Shiba Inu coin, real estate, the stock market. It's a lot of stuff happening. So it's a good stuff, and we're going to dive into that today. I recently did a podcast last week with a guy named Sari Ibrahim. I'll go ahead and post that in a couple of days, but it was great, man. I think it's going to be a lot of information that you guys need to hear, especially when it comes to using life insurance. You know what I mean? I've known about this for a while because I was a financial advisor at Northwestern Mutual, and the things that he's going to break down with what you can do with insurance is better than anything out there. As far as like an inflation hedge, taxes, you have to hear this podcast. You don't really hear me say that much about some of the podcasts that I do, but this one for sure, you have to hear it. We start out in the beginning talking about, a couple of different things, but 25 minutes in is when we get rolling, and he breaks down how you can use a whole life cash policy and the death benefit. He breaks it all down, and I think you guys really need to hear it because there's only so much you can do as far as like protecting your assets and protecting your money. You know what I mean? Especially with what the government's doing right now. So he breaks it down to a T, and he also gives 3 companies that you can use. And he's also willing to take on new clients at this time, and he doesn't have one of those crazy minimums like you need $250,000 for him to sit down and talk with you. So please check it out. He leaves his information on the podcast so you can reach out to him, because I know you're going to reach out to him after you get done hearing it. But like I said, it starts out a little bit slow because we're just catching up on a couple different things, but 20 minutes into it is when it gets going. But anyway, the app is finally done. You guys have been hearing me talk about this app for a while, but we went through the whole process. It is fire. Trust me when I tell you it's fire. I'm not just saying that because it's something that I created, but it is. If you're a real estate investor, you need to download this app. And it's a global app. We got properties from Colombia, Italy, Portugal, obviously the US, and it's just growing. You know what I mean? We got Argentina. It's already a global platform, and you can buy these properties straight from the app using cryptocurrency, US dollars. You can do property inspections, valuation reports. The list goes on. You can connect with other investors worldwide. So you guys need to download it. InvestFar Real Estate app. Go to Google Play Store, iOS, And if you're in another country, you might have the Aurora store. You can go there and download that from the Aurora store as well. If it's not in there today in the Aurora store, it should be in there in the next week or so. But guys, go take a look at it. I promise you, will be extremely satisfied with the type of properties that are on there, the way that you can buy them, and all the things that you can do from the app. But anyway, all right, guys, let's dive into this. The market, the market is amazing. I'm gonna say that it's super overvalued, but it's amazing at the same time, especially depending on what you got in. My portfolio, I am up 1,300% all time. That is insane, right? That's amazing because I bought in at the right time, and I've had my Robinhood account for a long time, probably 2016 and other platforms, but I was able to get some really good entries in 2020. You know, if you listen to my older podcast, I kind of told you guys what to buy, and all of those things played out. All of those things played out like they should have. I did a couple of short-term trades. I don't know exactly what stock that was. I did a short-term trade with Wells Fargo. I got burned on that one. And I did Zoom and a couple other ones, but everything that I did long-term, it all worked out. You know what I mean? So I obviously took some losses, but the losses that I took, obviously my gains were a lot greater because I'm up 1,200%. So look at the market for what it is right now. It's overvalued, but you can make money in almost anything right now. I don't want to say almost anything, but definitely in commodities because they're super undervalued. They're beaten up. Nobody was really trying to get into commodities that much in 2020. So they're still undervalued. But if you look at how the government has printed so much money, if you look at inflation, anytime there's high inflation, commodities always do well because the cost of goods goes up. So look at the cost of everything right now. When you go to the grocery store, when you do it doesn't even matter. I'm not even going to sit down here and break down exactly what you need to look at because it's in everything. So everything is created by something, and whatever that something is, it is going to be a commodity. And so that's why we're just in the beginning of this, where it's at the tip of the iceberg. So you should dump into commodities right now. And it's not like it was in 2020. You're still going to get those gains, but it's not going to be like 2020 was amazing, right? The exponential growth that people were getting within a month or 2 months. You didn't even have to know how to trade. All you had to do was basically buy some stuff and it was working. Right now, you have to be a little bit more strategic, but I think commodities are the same way. You kind of just have to buy something and just hold it. And it's not going to be like, you know, hopping in Tesla and it moves $35 in one day, but it is moving $5 to $6 maybe a week, maybe every 2 weeks or whatever that is. That's still an amazing gain in the grand scheme of things. You don't need 35% in $35 in a day because just like Tesla does 35 or 40 in a day, it obviously swings down that same way, and you can lose $40 or $50 in a day as well. So I think commodities is the play because over time, or at least over the next 2 to 5 years, we're going to see all this money flow out of tech into commodities because inflation is going to get worse and worse and worse as time goes on. I was talking the other day, and the economy has a lag. And if you look at what they were saying, I don't know, 2 months ago, that the CPI was at 1.2. 2 or 3 months later, the CPI is at 6.1. And they don't have a plan in place. And if the economy has a lag, we're at 6.2 now. There's nothing in place to combat this. They haven't raised interest rates. In 3 months from now, it's going to be even higher. Considering Christmas, people are going to be out here spending money. You got people with the supply chain issues. There's 110 container ships off the coast of California with over 60 to 70,000 containers. So just think, when people start doing Black Friday shopping, they're doing Christmas shopping and all these different things, the cost of goods is going to continue to rise because of the supply chain issues. So we don't have anything in place. It's not like we got a whole bunch of people coming back to work to decrease the labor issue with the labor shortage. So this thing is going to go. So if you look at that, it was 1.2 maybe like 3 months ago. Now 6.2. There's nothing in place. What do you think is going to happen 3 or 4 months from now? It's going to go from 6.2 to who knows, maybe 9 or 10%. But just know that this thing is going to keep going because the government hasn't decided to do anything. Or maybe they did, but they haven't put it in place. And it's not like you can just come out here and stop inflation. You know what I mean? They stopped the economy and they put it, basically the whole world at a standstill over a virus, but you can't do that now. You can't stop this inflation from happening. It's kind of too late. So the cat's out of the bag. And 1.2 to 6%, that's almost like hyperinflation. 50% increase month over month is technically the definition of hyperinflation. And obviously, when they send out these numbers, they're on an annual basis, but still, a 1.2 to 6 is ridiculous. And just know that this is going to continue. So I challenge you guys to do your research on commodities. If you look at oil prices, oil is, when I first got into oil, it was $35. Now it's at 85. And so when I hopped in, doing my research, a lot of people were saying it'd be at 65 to 70 by the end of 2020. And it was. And so now I think oil is going to be at $100 a barrel, probably by February. It might be at 200 by the end of 2022. So I'm overweight in oil and gas. I'm overweight in gold for sure. And you can see now gold has took a turn. I was in gold all last year. As soon as they decreased interest rates, I jumped in gold. And so since then, I've been riding it out. But gold did have that high in 2020 in November, and then it came back down to 1,700. And now that the inflation data has came out recently, now you see gold starting to go back up. I never really sold my positions. I hopped in and out of them because I looked at some charts and I saw that I was going in a downtrend. So obviously I hopped out because I didn't want to lose any money. And then some of the stocks that I didn't hop out of, I just dollar cost average down. So this one stock in particular, you might have heard me talk about it, JNUG. I bought in at like 120. And this was when, gold was booming. And so I was like, you know what? I'm going to ride it out. And it got, it made me some money. It got up pretty high, but then it took a turn. And I'm like, well, I didn't sell it because I figured it might just be a temporary thing. But it obviously just kept going lower and lower. So what I did the entire time, instead of, you don't lose money until you sell. So what I basically did was I cost averaged down, and I got my cost average from like 120 down to $66 per share. So now I'm back in the positive because this same stock is at $82 or $83 now. So that's one thing that you can do, but now gold's going in a positive direction. So I would, oil and gold are inflation hedges. They usually go hand in hand. One of them will go on a run first. And it seems like oil took its run and it's going on a run. And now you have gold going on a run. So they usually are correlated. So those are the reasons why I'm in those two commodities. But I'm also in agriculture, things like that. I want to pull up my Robinhood and give you guys more information. But I'm in those. Agriculture, I'm in lumber. What else am I in? That's basically kind of what I'm in right now. And what I'm thinking about doing, and this is, I don't think people take a look at this, I would get into China. China's getting beat up right now, but these companies are going to come back. They're going through all these regulation issues right now, but like what does Warren Buffett say? When people are scared, be greedy. When people are greedy, be scared. And so right now, no one is touching Chinese companies or Chinese stocks, except for big firms like Goldman Sachs, Charlie Munger, Warren Buffett's best friend. He just went all in on Alibaba. So if you look at Tencent was up around maybe $150 in 2020. Now it's down to, I believe it's $61. It is a $59 billion company. It might even be higher than that. Let me take a look at that real fast so I can give you guys some accurate information. But if it is what I think it is, you guys need to hop in Tencent. You need to hop in Tencent Music as well, because that's also, I'm sorry, it's $599 billion market cap. And right now the stock is at $62. So come on. We all know that that's going to come back to the proper value. So that's kind of why I'll be rotating my money. You can wait a little bit now until this regulation issues in China get under control, but I would still dollar cost average. That's what I've done. I've bought quite a few 10-cent stocks, and if it starts to move up, I'm going to be in a good position to add more and dollar cost average up. But if it goes down, I'm definitely going to buy more because it's almost a $600 billion company. If you look at the market cap of Tesla, it's at $1 trillion and it's at 1,100. So even if you cut it in half, which is basically what you'll be doing with their market cap, at the least, 10 cent would be worth $500 per share. So if you think about it like that, so this is the reason why you're basically getting a steal. So I would get in 10 cent. I would get in 10 cent music. Do your research on all of these. I've been in all these stocks, and I killed these stocks in 2020. I sold some of them, but I left some in position just in case it kept running. And it didn't. It turned on me, but I did make some profit. But I'm definitely going to be in these companies for the long term. So I definitely think you should look at that one. Look at JD. There's a couple other ones, but just look up Chinese companies. I mean, you can go on Robinhood and click on the icon that says China, and it'll bring up all the Chinese companies. So guys, definitely take a look at that. What else can I tell you guys about the market right now? I think you guys should be, I don't want to say be leery, because whatever goes up must come down. It's a matter of knowing when it's going to come down, and nobody can predict any of that, right? Nobody can predict the future. But what you can look at technical analysis and key indicators, and the 10-year treasury yield is inverting. And I did a YouTube video in October of 2019, and I said we're going to go into a recession. You can see that. And I pulled up a chart in that video, I believe, where I showed the 10-year yield inverting. So we were already headed into a recession. The consumer confidence was already at an all-time low. So all these different indicators showed that we were heading into a recession. So even if we didn't have the pandemic hit us, 4 or 5 months later, we still would have went into a recession. And right now, I think we're still in a recession, because if you look at all the data, we just got back to the point of where we were before the pandemic. There's no growth there. We reached almost, we didn't even get there completely. We almost got to it, but we didn't pass it. So in my opinion, I think we're technically still in a recession. The government wants to, or the media wants to say, oh, well, we had a good quarter, 2 or 3 quarters in a row that were good, but they weren't good. They were just returning to the levels of what they were before. That's not really growth. A recession, based on a technical definition, is negative growth over the course of 2 months. I mean, we didn't really grow. We just got back to normal, or we almost got back to where we were before. So I don't know how they're really technically saying that we weren't or not in a recession, because we're actually more like in a depression, in my opinion. Because if you look at, there's 333 million people in the U.S. and 100 million people are not working. I mean, that's close to half of the whole population not working. So if you look at all the issues that we have, to me, these are Great Depression-like numbers. You know what I mean? So if you look at the technical analysis on the stock market, and then you look at the real estate market, and then you look at the CPI, and look at all these different things, I don't know, man. It's the writings on the wall. I mean, it doesn't take rocket science. It just takes, people to be educated on what's really going on, and looking at it, knowing all these different things. I would say that we're in I don't want to say depression. We're probably headed in that direction. I mean, we're in stagflation right now. You know what I mean? There's high inflation with no growth. And on the other side of that, I mean, we should have prayed for deflation, but right now we're in stagflation. And on the other side of this, I don't see how it's going to go to anything other than depression, because we don't have enough people in the labor market. Prices of assets are going through the roof, stock market, real estate, and then the cost of living is going through the roof. So you can't have all of these things going on at the same time and expect the economy to do something the exact opposite of performing, because it can't perform, because we don't have enough people in the labor pool for the market for the economy to grow. So I think you guys should be prepared. And if you weren't prepared for the last recession or the last crash, most of the people, I don't know, I'm going to say a lot of people didn't work for almost 18 months. You know what I mean? Some people were getting unemployment, and some people were just at home. You might have been working, but you were at home, and you couldn't really go out and spend money. You could have been on Amazon. That's why Jeff Bezos was the richest man in the world until recently with Elon Musk. But you guys should have some money saved up. If you don't, that is a problem. I mean, that's a greater issue that you might have to figure out financially, because how are you able to spend, more money in 2020 Or 2021, considering things weren't really open. Like, what were you doing with your money? I mean, those are the times that you should have been getting your finances in order. But on the good side is, if you were one of those people that did get your money in order, your finances in order, I think that by April to June of next year, we're going to have another market correction. Because if there's nothing in place, like I just said a few minutes ago, and there's a lag in the economy, if there's nothing in place right now to combat this, why would there be anything different to come about in the next couple months? We have to have another correction because look what's going on in the labor market. Look what's going on with the cost of goods. Everything is going up and people aren't working, so people can't afford this. And look at the CPI. So consumer confidence is down. People aren't spending. Credit card debt is higher than it was before the pandemic, which is amazing because people were able to sit at home and save money. So it seems like people just went on a spending spree when the market collapsed. You know what I mean? It's like, well, I'm sorry, not when the market collapsed, but when the market recovered, people just went on a spending spree. And now people are more in debt than they were before the pandemic. But in addition, the cost of things are going up. So people are overspending, trying to keep up with the economy, and they might not be working. So these are all the reasons why debt could be a lot higher. I mean, these are all the reasons why credit card debt is a lot higher. And this is all the reasons why I'm saying that I think we're going to have a correction, and a very big correction, in April to June of next year. The government also can't print more money because this is the reason why we have high inflation. So they're stuck between a rock and a hard place because they also can't increase interest rates because that will also collapse the economy. So I don't know. You tell me. I mean, what are your thoughts? Do you see this can turn out any other way? What do you think the government is going to do? So based on all the information that I just gave you, what do you think is going to happen? So to put you guys in a better position, I think if you have the time now, this might be the Christmas that nobody gets anything, right? And they just have to understand that you can make up for it later. I would be stacking my money. I wouldn't be going out here and overspending on a blow-up doll for your kid that last year was $50. Now it's like $200. This year, he just might not get that doll, or he might not get that toy truck, or that whatever that is. And your girlfriend or wife might not get that bracelet. I think people should be strategic about how they spend, especially considering if you have the opportunity 7 months from now to have more money than you have right now to invest just because you cut your spending back for the holidays. Don't you think that's a good idea? Because on the other side of you being able to stack this money, go out there and get into the right investment vehicles, you'll be able to have a way better Christmas next year. So I think people should take into consideration what I'm saying right now. It might suck. Maybe get 1 or 2 gifts, but don't go out. Parents try to go above and beyond for their kids on their birthdays. Some people do. But I think this is one of those years that shouldn't happen, especially with the surge in energy prices that's supposed to happen. The cost of energy is supposed to be up 60 or 70%. By January. So if you take into account your energy costs being up, produce is up 40%, and just know that this stuff is going to continue. So why take the risk of going out there and buying a bunch of gifts and if you have kids, if you get your kid a toy, he'll play with it for like 3 or 4 days, or maybe 2 weeks, and then that thing's in a box in the corner somewhere. He never plays it again. So with knowing this would be one of those years that the kid's not getting something that he's going to throw in the closet after 2 weeks. And then in a couple months from now, when you're able to, load up on certain stocks and buying real estate at, pennies on a dollar and things like that, next year, it won't even matter if he gets a gift and plays with it for 2 or 3 days and he throws it in the corner. So keep these things in mind. That leads me to my next point with real estate. Real estate is extremely overpriced. You know what I mean? I have a bunch of houses. Every single house that I sold last year and this year, I sold 25 to 30% over asking price. You know what I mean? It wasn't even this house that I'm selling right now, which is my last house because I'm trying to get out of the real estate right now so I can take most of my money and have it available to buy different assets. That house took the longest, and I sold that one like 35% over. Oh, no, that one, the market kind of cooled off on me on this one. So I sold it for exactly what I wanted. I got basically my asking price, but any of the houses that I did before that, I basically got over asking by 25 or 30%, and it was on the market for like 6 hours. So that leads me to my next point. Homes are still staying on the market or they're starting to stay on the market longer than they were before. I mean, this thing was on the market for maybe 2 or 3 months. And, I sold maybe 5 or 6 houses this year, and they were all gone within 6 hours. So that's another indication that the market is cooling. But one thing that I am noticing, there are more houses coming to the market. There are a lot more pre-foreclosures. There are a lot more foreclosures. I think I read an article the other day that said foreclosures are up 26%. This was a month ago, so I am extremely sure that's higher now. And considering that I have InvestFar, we get asset managers that send us properties all the time. So for the whole 2021, the beginning of 2021, I couldn't get a house. There's nothing that I could do to say anything to any asset manager to get properties. It just weren't any out there. Now it's ridiculous. I can't even explain to you how many houses I get on a regular basis. I mean, it's so many that I can't get them all on the app. It'll just take too long. And this is just the beginning. And so you might have heard me on a previous podcast, maybe it was somebody else's podcast, that I said January or February, we're going to see a flood of inventory. If we're at 26% right now or a month ago, again, remember I said everything has a lag. If we're at 26% right now, just think about what it's going to be like in January. We're going to have way more. So if you guys, sit back and collect your money, stack your money, you'll be able, because the economy is going to turn because people can't afford these houses. The prices. I had a house in Vegas. I sold it at the beginning of the pandemic. I wanted to hold on to it because I didn't know what was going to happen. I sold the house. In a year later, this house is up $175,000. That is ridiculous. And this is what I'm saying. The market can't support this kind of growth, especially considering there's 100 million people unemployed. There's a labor shortage. The cost of goods is going up. All of these different factors are going to lead to a market correction. I don't know if there's going to be a housing collapse like 2008, but it is going to correct. I don't even think right now is a good time to buy a house unless you're going to get it through pre-foreclosure, where you're going to go in and you're going to take over the mortgage from somebody. And you may be paying $7,000 to $10,000 or $15,000 to catch up the payments. That I would suggest. But going out here and buying a house retail in the U.S. market, that doesn't make any sense because it's going to correct. So the same way I was talking about stocks, you can't dollar cost average into a house, though. Once it turns on, you just got to sit on it for however long it takes before the market can rebound. That's why I don't think you need to go out there and buy real estate right now unless you're getting it through the strategy that I just said. Unless you're getting a good deal on an investment property. So there's quite a few houses on InvestFar that are very discounted. And some of them are even in other countries. But if you want to find properties in the U.S., there's some on there that are discounted and they're still of good value. You could rent it out and things like that. But a lot of properties that I see that have a lot of value are out of the country because markets like Colombia, Medellin, if you go to the app, you'll see a property on there that's like $80,000. There's one on there for $37,000, 2-bedroom, 1-bath that you can cash flow. You can't find these prices anymore in the U.S., but you can get a better return by going out of the country. There's a couple properties on there that I saw that were in Italy that you can get a good deal on. So this is what I'm saying. I think what is going to need to take place for the next couple of years, based on what the government has done, these policies that they've done are going to drive people to other countries, right? Increasing taxes on basically everybody. Inflation is a tax. It's a hidden tax. People don't want to accept that. But with them trying to tax, for instance, in California, they're taxing people just for driving. So you have a driver's tax they're trying to enact for you. If you commute, you got to pay taxes. That's insane. They're trying to tax unrealized gains tax. So if you had a house and say it went up like this particular house I had in Vegas, it went up $175,000. The government's going to now tax that $175,000 of unrealized gains, which is not fair. Normally before, you would only get taxed when you sold something that would be a capital gains tax. Now they know that people are holding on to this. And so now they're like, okay, you want to hold on to it? We're going to get you anyway by doing an unrealized gains tax. And that is ridiculous. So there's obviously a strategy around that, which is going out there and doing a refinance. But who knows, the way this, government's going, they might figure out how to tax a loan. I don't know. They'll figure out how to tax anything that has gained, man. They're going after anything that is of any kind of value that, you created through investing. I don't know what their plan is. I don't know what it's seeming more like they're trying to, become socialist with their policies, but I mean, they're making everything worse. And we still have 3 years left. 3 years left of what's happening right now. And I don't see it, turning around and becoming any better. This whole talk about inequality, they just made inequality 1,000 times worse. I mean, they shattered it. They killed it. I mean, they say, I think it was 88% or 90% of all the value or all the stocks are owned by, 10% of the population or something like that. This all happened this year or last year. So, I mean, it all happened under the current administration's watch. So anyway, sometimes I go off on these tangents because it's just like every time I think about what they said they were going to do, and a lot of politicians are like that. It's just like I had a conversation with a couple of people about that, and I even did a podcast on what I thought was going to happen to the economy if Biden became the president. And if you go back to listen to my podcast, I think it was called Post-Election Economy or whatever it's called. You can see what I said, and it played out in the exact way that I said it was going to play out. But back to real estate, I think this is the best thing to do considering what's going on right now. And they're basically throwing money at people right now because they're trying to stimulate the economy. You can go out now and get private money loans and only have a 600 credit score from, different institutions. Even certain banks are not requiring you to have credit anymore to get credit cards. So they're basically trying to throw money at the system. So what I think you guys should do, I think you guys should go out there. I think you guys should get a mortgage, but be strategic about the type of property that you get. You obviously want to get something that you can either force equity into, so go out there and buy a foreclosure, or like I said, a pre-foreclosure, and you force equity into it because that means you bought the house at a discount, and now you're doing a rehab and you're forcing equity into it. You're going out there and say you're getting a loan on $80,000 or $100,000. Let's do $100,000. You're locking up $100,000 at extremely low interest rates. And then the cost of that property is going to go up. So you're basically getting $100,000 at a 2% interest rate. That's almost nothing. I mean, you're probably paying $2,000 in interest, which is amazing. So you go out there, you basically get $100,000 for $2,000, right? And then you hold on to this money for the next 15 or 30 years because we all know that asset is going to appreciate over time because inflation they always do 2% year over year. So you know that a property is going to appreciate by 2% year over year. We know that's wrong right now because inflation is probably at 15% right now. So we know that the value of properties is going to go up. So you go out there, you take out a loan for $100,000, 5 or 10, 15 years from now, that property is probably going to be worth $300,000 and you got it for $100,000 and you're paying nothing. You get that, you refinance it in a couple years and you basically got free money. You know what I mean? You didn't do anything. You might have rented that property out to somebody else, or even if you lived in it, you still were able to get this house paying almost nothing every single month or renting it out and collecting whatever you were getting. And now this house is worth $300,000. You do a cash out refinance, you take the cash out tax free for now, and then you do something else with it. So I think that is the play. The play is go out here and get real estate. And even if you don't wait 5 or 10 years, at the way that things are appreciating because of inflation, I just told you that the house went up $175,000 in less than a year, almost at a year. In May was a year. So almost a year and a half, this thing went up $175,000. So say you go out there and you do a cash out refinance on that house, you pull out 75%, you'd be able to pull out like, I don't know, $100,000. And you keep that, and within a year. So that's the play that I think you need because it's safe. There's really no risk associated with it unless you don't have the money to pay the mortgage. But that risk is way less than you going out here and putting your money into the stock market, because that thing is going to turn. So if you go out here and you put, $30 or $40 or $50,000 into the stock market, you don't know how that's going to end up. But if you take 30 or 40 or 50 grand and you put that on a down payment onto a property, you have already forced enough equity because you put 20% down on this property and you put rehab into it. So you know that the equity is there from the jump. So that money is so safe and secure. So that's what I think real estate is the play. I think cryptocurrency is also a good play. Look at the Shiba Inu coin. I myself got burned on coins, because the reason why I got burned, not because the coin turned on me, is because I tried to cross invest and I didn't buy and hold. So over the past, year or so, my strategy has changed. Now I just buy and hold. That's Warren Buffett's strategy, and I get it now. It makes complete sense, because when you try to trade, you don't always have a good entry going back in. So back to the whole thing with crypto, I bought XRP, I had Bitcoin, I had Ethereum, I had Bitcoin Cash, I had Litecoin. I had all these coins, but they weren't growing as fast as they should, in my opinion. So what I did, and what I did often, was I would take my crypto, I would sell it, and then I would go and buy real estate. If you take a couple deals that I mentioned that took a little bit longer to sell, I didn't sell the house fast enough to get back in the proper position. So then I got burned, because if my entry was like $100 on Litecoin and then it went to 200, that's a bad entry for me. I could have just left it in there and, took money from somewhere else and put down and bought a house or whatever I had to do. But I'm just like, you know what? This money is not growing. It's not moving fast enough for me. I'm going to take it. I'm going to put it somewhere else. And then once this happens, I'll put it back here, because that's kind of what I do with my money. I don't like keeping money in the bank, because if you look at inflation, again, it's just eroding sitting in the bank. But I learned my lesson on that, because I got burned. Like, look at Ethereum, look at Bitcoin, look at all these coins now. I didn't go back in. Even when I sold these houses, I never thought, because it was still moving slow, to put my money back into crypto. But as you can see, crypto goes on it's super volatile, then goes on these crazy runs. And it just create higher highs and lower lows. So if my low was $100, now trying to re-enter, the low is 150. I'm going to do it, but I'm out of position and I lost a bunch of money. So now my strategy is I just buy and hold. I think crypto is a good play. If I just bought like 100 million worth of Shiba Inu coins. I'm going to sit on that, because I think that's good. I think that is good tech. And I think in the long run, Shiba Inu is going to be worth a lot, because if you look at Dogecoin came out in 2016, I believe, and it's at a 30 million market cap. Shiba Inu coin came out in 2020 and it's at a 30 million market cap. Granted, it has like 500 trillion tokens, but they can do burns and get that down. But the technology behind what they're doing with the NFTs is built off the Ethereum blockchain, which Dogecoin was not. So even if Dogecoin is a top coin and it's at 27 cents last time I checked, Shiba Inu is at a fraction of a penny. Even once they start burning and they start burning coins to a certain point, at some point in time, it'll get to, if you look at all the top 100 coins, they're all at least worth 10 cents. Shiba Inu is like top 9. It's like, I think it's number 9, and it fluctuates between 7 to 10 or whatnot. If you look at all the 100 coins, like I said, if you go to, cryptomarketcap.com and see that 100 coins, you'll see they're all over 10 cents. Eventually, this coin is going to get there, whether it be 5 years from now, whether it be 10 years from now, whenever they do a burn, it's going to get to a substantial value, which even if it gets to a penny, if you sit on 100 million, you're still going to make a lot of money. Right now, 100 million doesn't cost you that much. Like the guy who bought, with 8,000, turned it into $5.2 billion because he dropped 8,000 at the right time. And then it just went on a move like crypto does. So I think it goes back to my strategy with saying you buy it and you sit on it. I did the same thing with my stocks. I did try the whole trading in and out during 2020, and it didn't work out well for me. All the coins, all the stocks that I sat on that entire time and didn't sell, I crushed it, and that's why my portfolio is up 1,200%, and it's still going because I'm still in those positions that I initially bought at. I was so bullish on commodities that I was like, I'm not selling these. I sold 2 of them, like I said, and I got back in those in good positions, or I cost average down. All the rest of them I sat on, and I'm doing well. This is why I go back to the whole buy and hold strategy, and I think the same thing applies to real estate. If you look at what I just said, you get something for $100,000 now, with inflation being what it is, it's going to be, and inflation, if it goes like it's going right now, I mean, it won't take you longer than a year or 2 years to be at some ridiculous value because of inflation. And I think I was talking to my mom, and I'm like, if inflation is 15% or 10%, I think I told her, and you got $20,000 in the bank, and inflation is 10%, you basically just lost $2,000 with your money just sitting in the bank over the course of a year, just by the money sitting there doing nothing. And like I told her, I'm not telling you to go out here and spend the $20,000. Go out there and spend 10 or 15 of it just so you can compensate for that $2,000 that you're going to lose. So if you can take 8 or 9 grand of that 20,000 and make $2,000, whether it be investing in the stock market or crypto or whatever, you just beat the inflation. You just beat the issue of losing money, for no reason. So you just beat the depreciation of your currency just by just taking a portion of it and getting a return. And so that's what I think you guys need to do. I'm not sitting here telling you guys to go out there and spend all of your money on, buying stocks or investing in real estate, crypto, or whatever, but you do need to take into consideration what the inflation is and that it's not going anywhere. And the cost of everything is just going to keep going up. So if you do nothing, you will have nothing. It's just going to keep eroding in the bank account. So scared money doesn't make money. And this is not the time to be scared because inflation is going through the roof and you need assets. You need something that's going to protect you. And anytime there's hyperinflation, if you look at Weimar, if you look at what's the stock market in Africa, Zimbabwe, if you look at when all of these countries had hyperinflation, the stock market was through the roof. It didn't really matter because the value of their dollar was worthless. So at least they had something that kept growing, that when the currency was depreciating, at least their asset, whatever it was appreciating to kind of help out those people that were in the market. So just know that the stock market could probably continue to a certain point. And maybe that point might be when they decide to raise interest rates. I don't know when that is. Or maybe it could be when, there's no more money to go around and the government doesn't print out more money. I don't know when that time is coming, but I do know that inflation is going to keep rising because there's nothing in place that's going to prevent it from not rising. And as soon as they raise interest rates, which they can't, but if they do, the whole entire market is going to correct, because with higher interest rates, that means mortgage rates are going to go up. That means the issue for corporations with borrowing money, all of these things are going to be a negative factor. And this is why I think there will be a correction. And the government needs to raise interest rates to cool down inflation so the money is not out here running rampant like it is right now. So either way it go, there's going to be a correction because it has to be. We don't know what that is, but just like I said, based on me looking at charts and based on me seeing what's happening in the economy, I think it is 7 to 8 months from now. It has to be. And if not, then we're just in this new economy of just things just continuously going up. But just keep in mind that if these things continuously go up, that means their purchasing power of your dollar is going down. So like I gave you the example of my mom's 20 grand, and that 2,000, that might go from 2,000 to $5,000 or $6,000 or $7,000. So her 20 grand is gonna basically be like, 10 or 13 or 14 grand just because it's sitting in the bank. So guys, I think you need to go out here and be strategic about your investing and diversify. I'm in stocks, I'm in crypto, I was in real estate, and I'm still thinking about going into real estate once I sell this house, but just going into a different market. So, a couple of properties that I have seen on InvestFar, I am probably going to purchase those because they are in another country. I said this in my book, which is coming out next year. I don't think, and you heard the saying, people shouldn't keep their eggs in one basket. If you keep all of your financial assets in one country, you keeping all your eggs in one basket. That's why I think it makes sense to diversify your stock portfolio. Get Chinese companies. I got Brazil. I got China. Emerging markets. Get real estate in other countries. It is very easy to get real estate in other countries. They want your money. It's very easy to get real estate in Colombia and get a residence visa with that. It's very easy to get, property in Europe. But people don't know. So if you don't know, you just don't, right? If you know better, you do better. And I'm trying to educate you guys on what to do, because the state of the U.S., if you're listening to this, do your own. Just sit back, take 10 minutes and look at how the U.S. progressed from when you were a kid, or what it was like in 2020, or what it was like in 1988 or 1990. Just look at it. Do you think that the U.S. is getting better, or do you think it's getting worse? You have to know that it is getting worse. You can see it. It's very evident with civil unrest. All of 2020, that's what they were doing. Look at the economy now. If you live in LA, then you know what the homeless population is like. If you live in Southern California or California in general, then you know what I'm talking about. It's not getting better. And this took a turn for the worse in 2021 within a year. Look at immigration. Look at what's going on at the border. I'm telling you guys, I think you guys just need to look at what's going on, take a step back and look at what's happening with the world as a whole, but definitely look at what's going on in the U.S. If you live here, you'll come up with a strategy. You need to come up with a plan B. And that's why I'm heavily situated in Colombia with a company, employees, a life. I got everything going in Colombia, like you guys have heard me say before, if you heard my podcast. So have a plan B, right? Because if nothing happens, then cool, you got a whole nother setup in another country. But if something does go, and it does keep going at the rate that it's going, then you're just going to hop on a plane and go somewhere and just be chilling like nothing happened. So guys, get to investing. And I'm going to say this again about the Shiba Inu coin. I think it's a huge play, man. I think it's becoming more mainstream, like Dogecoin. All of these coins are altcoins. Some of them get more attention than others, but Dogecoin wasn't getting that much attention. And it was just like Shiba Inu. And then it got on the radar of Elon Musk and other people, and now look where it is. It got on Robinhood. It's super cheap right now for you guys to go out there and buy it, do your research on it. But this is a top 10 coin, and it's not even a penny. It's not even close to being a penny. So I think that's one of the plays of the century. You know what I mean? Like, it's low cost, low entry. The technology's good. And even if you just go off, everything's based on percentages. So even if you get in there now and you take $1,000 and that 1,000 goes to $5,000, or you turn that 1,000 into $10,000 just based on the news alone, like, why wouldn't you do that? So, if you don't have $500, man, go out there and figure out how to get $500 or 1,000 or 2,000 and go out there and get you 30 or 40 million coins and just let it sit. There's nothing wrong with that. And just don't worry about it. Set it and forget it, because the technology behind it and the popularity behind it, and if it gets listed on Robinhood, it's going to have a pump. So, why not just take advantage of the pump? So, I'm not over here preaching cryptocurrency because I'm not all in on crypto, but I think it's good. I think it's good to just be diversified. And in this case, with this coin, I just done my research on it, and I think it's a viable token that people should look into for the simple fact of the technology and what they're doing with the project. But anyway, thank you guys. It's been a while, but I will try to be more consistent. I know that I say that every time, but life happens, man. And you got things going on. And what was basically holding me up for the most part was InvestFar. But now that that's done, I have way more time to allocate to education and helping people out and doing podcasts and mentoring people. Stay ready so you don't have to get ready. Be on the lookout for the podcast with Sari, because it ties into what I'm saying right now. I'll try to post that a couple of days after this one posts. And I will see you guys on the next episode. Take care.
Aren't you ready to start a business or grow your real estate investing portfolio? If you answered yes, allow Andre and the expert advisors at the Residual Roads Business Institute to fast track and put you on a path to full-time investing. The greatest transfer of wealth in our lifetime is occurring over the next few years, and you can take advantage if you know what to look for. In order to be successful at real estate investing, you need to learn how to leverage your current resources to generate quick money, big money, and retirement money. Let Residual Roads advisors craft a plan to get you through these phases using little or no money in 6 months or less. Don't wait for a job. Create one for yourself and others. Go to residualroads.com for mentorship, and for our free course, go to residualroads.thinkific.com.